Hello, this is Leroy Meadows, and in this session, we will talk about spoilage and job costing. So we're going to work out exercise 18-32 at the end of your chapter. That's chapter 18 on spoilage, rework, and scrap. So let's go ahead and get started. Barrett Kitchens produces a variety of items in accordance with special job orders from hospitals, plant cafeterias, and university dormitories. In order for 2,100 cases of mixed vegetables, costs $9 per case. Direct materials are $4, direct manufacturing labor $3, and manufacturing overhead allocated $2. The manufacturing overhead rate includes a provision for normal spoilage. Consider each requirement independently. So we have three different requirements here, and we're going to look at those independent of each other and just base our assumptions on the actual text of the problem itself. Scenario 1. Assume that a laborer dropped 420 cases. Suppose part of the 420 cases could be sold to a nearby prison for $420 cash. Prepare a journal entry to record this event. Calculate and explain briefly the unit cost of the remaining 1,680 cases. So we have to look at here that the laborer dropped 420 cases. We don't know why they dropped it, but we know that it was dropped. So something was careless, or someone was just not paying attention. But this is a damage probably due to abnormal spoilage because it was not inherent in the production process. This was just dropped cases. So we have that, so we know we have abnormal spoilage. We also know that we sold those part of those 420 cases for $420 cash to prison. So what we have to do is calculate in a journal entry recording this. So first of all, we have what? We debit cash for $420. Why? Because that's how much cash we received. Now, we need to figure out our spoilage. What is our total spoilage? Well, our total spoilage is what? 420 cases times $9 a case. So we have total abnormal spoilage of $37.80. But I was able to realize some value in selling $420 worth of stuff to the local prison. So I'm going to subtract $420 from that. So the remaining loss on the abnormal spoilage is $3,360. And then, so now I've accounted for that total spoilage, $3,700. And then I'm going to credit the specific job work in process control account. And that's going to be for $3,700. And again, that is a total spoilage. Now, because this is abnormal spoilage, this is not going to affect the cost per case because we are not rolling the cost of normal spoilage into the cost of good units completed. Had this been normal spoilage, then we would have rolled that cost over to good units transferred out and sold, what have you, and that would have increased the cost per case to incorporate normal spoilage. But remember, abnormal spoilage is a separate line item on the income statement, so we're not going to roll that cost over. Why? Because that loss from abnormal spoilage is going to be considered a period cost. So the remaining cost per case is still going to be $9. Now let's take a look at requirement 2. refer to the original data. Tasters at the company reject 420 cases out of the 2100 cases. So they reject 420 out of the 2100. The 420 cases are disposed of for $840. Assume that this rejection rate is considered normal. Prepare a journal entry to record this event and do the following. Calculate the unit cost if the rejection is attributable to the exacting specifications of this particular job. In other words, is it related to this particular job and to the specifications required by the job? And then we asked to calculate unit costs if the rejection is characteristic of the production process and not attributable to the specific job. And we're going to compare unit costs between 2A and 2B and explain that, if there is a difference or if they're the same, why that might be. So, first of all, in 2A, we are told to we have to prepare the journal entry to record this event of the receiving of $840 for these 420 cases. So what we're going to do is debit cash for the amount received, $480. And we're going to reduce our work in process control account by that same amount. Why? Because now we've reduced the cost of that because we've realized some value in that. So the cost of the remaining cases is going to be what in this case? Well, remember that this is part of the job itself. This is not part of the production process. Overall, is because of the specifications for the job. So what we need to do is we are going to take our full 2100 cases and multiply that by $9 per case. So the total cost of those 280 or 2100 cases is $18,900. But because that's normal spoilage related to that, we're going to include that cost in there. But we're going to leave it the same, the total cost, but we're going to reduce it by the amount of cash we actually receive for those damaged goods. So I'm going to subtract out $840, and that leaves me a total net realizable cost of $18,060. Now I'm going to spread that out over the remaining good cases. So remaining good cases, how many were there? We're told 1680. We could also compute that as 2100 total cases minus 420. That would also get to 1680 cases. So I'm going to take the $18,060 and spread that out over 1,680 cases, and I get a unit cost of $10.75. So the remaining units that are good absorbed the net spoilage from the job because that spoilage was related to that specific job and because the specifications required by that specific job. Now in 2B, we're asked to calculate the unit cost if the rejection is characteristic of the production process and is not attributable to the specific job. So let's take a look at a journal entry first. What would I do? Well, of course, I'm going to add in my debit cash for the amount we receive of $840. And I guess I made a mistake up here. This should be $840 for requirement 2. Just notice that. Okay. So I lost 420 cases, but I was able to get back part of my money that I've invested in there. So let's take a look here and let's figure out the cost of the spoilage now, or the cost of the units. The total number of units was $420, right? or 420 cases times $9 per case gives me my total spoilage of $3,780. That was my total spoilage, but I'm going to reduce it by the amount I was able to sell that spoilage for, which was $840. So the total spoilage that I have to account for now, the remaining part of the spoilage, is $2,940. I'm going to go ahead and put that in here. But what do I charge it to? Well, because it's inherent in the production process and not because of that specific job, I'm going to charge that to manufacturing overhead. And then I'm going to credit work in process for the total amount of spoilage. So now let's compute the unit cost here. Well, the unit cost, because this was normal spoilage, but it was not attributable to that specific job. Remember, manufacturing overhead control has built-in normal spoilage when we're computing the manufacturing overhead allocation rate. We talked about in our chapter that manufacturing overhead, the estimated amount, builds in normal spoilage. So we do not have to charge the job that. Why? Because it's already being charged to manufacturing overhead. So my cost per unit of the remaining 1,680 is going to be the same, $9 per unit. Why? Because any loss is going to be sent to manufacturing overhead, not charged to the job in and of itself, or not recorded as a line item on the income statement, like loss of abnormal spoilage work. Because this is normal spoilage, normally we would roll that over, like we did in the first example, to figure out our cost of spoilage, the cost per good unit. However, this cost is being charged to manufacturing overhead, which is already incorporating a specific amount of normal spoilage here. So now let's take a look at situation 3. Tasters rejected 420 cases that had insufficient salt. The product can be placed in a vat, salt can be added, and the product can be reprocessed into jars. This operation, which is considered normal, will cost $420. Prepare a journal entry to record this event and do the following. Calculate the unit cost of all the cases if this additional cost was incurred because of the exacting specifications of this particular job. Calculate the unit cost of all the cases if this additional cost occurs regularly because of difficulty in seasoning. And then we're asked to explain how the unit costs are the same between the two. So let's take a look here. We have a rework situation where we're going to add additional, in this case, materials to the job. So what am I going to do? I'm going to charge in unit A, or requirement A, I'm going to charge the job the extra $420. Why? Because this cost was incurred because of the specifications of that particular job itself. So because it's specifically related to a specific job, I'm going to charge that job the additional $420. And I'm going to charge them for any materials added, any wages we had to incur, or any overhead that had been allocated. Now, what is the total unit cost? Because this is specific to the job in and of itself, we're going to roll the cost into that job. So I'm going to take how much of my cost? My total costs were what? According to the problem here, 2,100 cases times $9 per case gives me $18,900. Plus the additional cost of rework, or adding additional salt, the wages, depreciation, everything associated with that, plus $420. Now I'm going to take that additional rework in addition to the original cost and spread that out evenly over the 2,100 units. And when I do that, I get a cost of $9.20 per unit. But now let's take a look and see, and what would we do if this rework was attributable to all jobs, or because it's just part, and this occurs regularly because of the difficulty in seasoning. Then what job would I charge? What account would I charge? Well, in that case, because it's common to all jobs, manufacturing overhead, control, $420. And then finally, credit materials, control, wages payable, etc., 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 for $420. Now, because that cost is not going back directly to that job in this scenario, because it occurs as a process and not because of job specifications, that's being charged manufacturing overhead, which incorporates and includes and absorbs all that normal spoilage. So in this case, there's no additional cost up and above the $9 per case to incorporate here. So when the job is, or when the spoilage is related to the manufacturing process itself and not because of a job, it does not influence, it does not affect the cost per case. And in this case, it was $9 even. So that is the difference here between those two costs. And don't forget that because we're in manufacturing overhead, we're already considering normal spoilage. So that is when we compute our overhead allocation rate. So it's already absorbing those costs because of the production process. So to actually charge work in process for spoilage costs that occur because of the process itself and not because of the job would actually be double charging that job for that spoilage. So this is Leroy Meadows. I want to thank you for joining me. Have a good day.